Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this wrap-up is for Wednesday, the 6th of March, 2019, and we're right now getting past 4:30 in the afternoon. You know, if my subscriber videos in the morning served any purpose to a lot of you, you had an edge on other people, the people that watch these and just do it for free, as I think our calls were pretty darn good on that. And the reason is, if we take a look at these charts, you would come up, you started backing off, you're down for the week about 33 points. But it was this pattern that started creating the problem in the market, and I'll show you. You've got the higher high, lower low with the action, but you really made the lower low 2 days ago. Do you see that outside day down? Then you take a look at the market, and I want you to look at the 18-day average of closes, because the indicators that we use had said this market was coming back to that number. Let me just show it. What I'm not about here is telling you buy here and sell there. We're talking momentum, and that's often a large part of trading. First thing is, market went sideways on an overall picture. It certainly wasn't doing what the market was doing here. Now you're into the first support of the 18-day average. The second support becomes the 200-day moving average of closes. The market did not hit the upper Bollinger Band. It's actually developing this sideways action, and momentum, and this is what I'm getting at. Momentum, as of Monday, was hanging on, and yesterday you lost it. When you lost it, it puts into play the idea that price and the 18-day average are going to come together. Now, you might say, well, that's not a lot. Well, it's 24 points. I don't know. To me, that's a lot in this market. And as you look at it, and all of a sudden you bring into today, you've got right there. The point is, and I'm going to stick with it over and over, often, nothing is the word always, often momentum leads price. When we come to the NASDAQ, you've lost the embedded reading. Now, what about yesterday? You had it. Today's the first day, Wednesday, that you've lost it. What do I tell you when you lose it? You can get it back the next day. The problem for this market, and ideally I'd like it to reach to that 18-day average, it's already at a key number. It's at the 200-day moving average. So I watch the different averages, and I'll back away from trying to play one of these trades for my clientele when I put out the recommendations for them, with saying, you know, you might be at that number already. I'd be a bit cautious. Whether you get the 18-day or not isn't the key here. Notice how the 200-day average is way underneath the 18 in this case. And what did this market do? If we come together here, here is the market right here, and this is Thursday. On Friday, you kept the embedded reading. You lost it on Monday. When price loses that, you often go to the 18-day average. In the case of the Dow, it did it all in the same day. And all that you did today is come back to that number. That's how I look at it. In the Russell, we'd been talking that this was the weakest of the indices, and it lost itself right on this day. It had not, on this particular day, hit the 1559 level. Came up a little bit yesterday, so today, for good measure, goes right to it to get to it. And notice the 200-day average was above. Always look where the moving averages are in relation to price. You want to feel for that so you understand, are they acting as resistance, support, and as targets or non-targets. Right now in this market, you're in a downtrend. It's the first one we're saying in a real downtrend. Lower highs, lower lows, under the 18-day average, momentum pointing down. In the VIX, caught in this narrow sideways band. Now, if this market rallies up tomorrow, I wouldn't be surprised to see the pros tiptoe and write some calls at the upper Bollinger Band to see what goes on. Admittedly, momentum is up. You're not trending. But whether it's a put or a call, they often sell the first challenge of a Bollinger Band. That's what I've noticed, at least. And try to get out at that 18-day average of closes. In the T-bond market, I see a market void of trend. I see an attempt to push out the lower band. The market got oversold in the process. It's slowly correcting that, but all it's doing is bouncing back into the bands. You still have the higher high, lower low pattern. You have not set up a trend. In T-notes, coming to the 10-year, the resistance, the 18-day average, you got up today to 122.08. What do you think the 18-day average of closes is? 122.08. So it went back to that, what we call that line in the sand. The 18-day average is often a number, if the market plays around it, it's telling you a story that from there, it's going to try to do something, and obviously you need to see it. Does the setup work? Does it fit into what your psyche is? Where are you at that point? My psyche is that of a chartist. So I don't come into the market with a bias, oh, I want to be bullish because of this set of fundamentals or not. I'm a psyche of just trying to stay disciplined within the charting principles. I don't see a trend here at all. As we come now to TLT, you've had the lower highs, lower lows. I'm pretty sure that I would have said, I think the pros are taking money against the lower Bollinger Band in an oversold condition. And now that the market's coming up, I think the pros will wait until both numbers are over. The word is over 30. And if the market's around that 18-day average at that time, they might even probe the market on the short side. What I've noticed is when you get these low numbers that aren't embedding, I don't think the pros do too much in it. And what do I define as a pro? I'm talking to guys with experience, floor traders used to be. Now they're probably sitting in front of computers doing that type of trade. But whether you were in the floor or you're doing that, if you're a technician, it's what it is. It's actually easier off the trading floor, believe me, because you're able to watch your charts and stay with a discipline. Can't do that in the pit. The emotion gets you. How do I know I did it? As you look at the March dollar index, lower low, higher high, you look at the 18-day average of closes, I'm not seeing a trend. I'm seeing a market that's developing a broad swinging range, but it's not trending just yet. And in the euro, I don't see a trend. I see it, the flip-flop of the dollar. I see the market trying to sit within these Bollinger Bands, trying to figure out what the next move is. I have a lower low and I have a higher high. I stay with my discipline, momentum pointing down. British pound, you've still got a market that's correcting an overbought condition. The market is still, any readings, by the way, that are over 70 on the slow stochastic are overbought. Anything under 30, oversold. And then in order to embed, you got to be over 80 or under 20 for a certain period of time. In the Japanese yen, this is called embedded. So I think the pros are selling this market. Probably here. I don't know if they'd sell it that high. You might not keep the embedded reading, but I think if you get under today's lows, they may hit it again, maybe trying to press into that lower band. Lose the red line over 20, and I think they run for the hill. Right now, this market is running these lower bands in a locked-in bear trend. In Bitcoin, the momentum of the market to the upside, I'll call it that. The bias is certainly up. You're over the 18-day average. And the trend, if this market is up, with higher lows, higher highs. Even today's high took out that one. To break this pattern, you've got to take out 36.55. Otherwise, there's still the potential here for the test of the $4,000 range. In WTI versus Brent crude, actually, it's Brent versus WTI. That's the way that I plot them. You're seeing the spread widen. As Brent, they're still in the production cutting phase. And if you looked at the EIA or API numbers, we have an awful lot of crude. We're awash with crude itself. What people aren't understanding is the products are starting to move. That's not the worst thing. Also, oil wells. In the U.S., we're dropping the amount of wells right now. We're getting more oil with better technology. If you take a look at how the market's done, it's worked itself in the Brent down to the 18-day average of closes. Didn't quite hit the 100-day today, but it hit it the other day. So you're into a zone where the market's trying to figure out what do you do from here. And notice how it's backed off. By the way, this whole back off began. You had an embedded reading. You lose it. You didn't get it back. Game, I think you're going to the 18-day average of closes. Bingo. In this crude, not the same. You just got overbought in this market. So it's a correction back into the support of the 100-day, the 18-day. This market could turn bearish very quickly by a close under the 18 because you already have in this market lower highs, lower lows. Let's assume the market rallies and gets over 57.19, the last high of yesterday. You'd still have a lower low than higher high period. So I don't see anything quite there yet. Gasoline is trying to do what? Let's look at the numbers. They're both over 80 today. Yesterday, they were both over 80. The day before, not. Tomorrow's a key day for this market. If it can keep both over 80 on the third day, then on the pullbacks, I think the market starts getting bought again by the pros until it loses that reading and it puts into play the potential of coming up here. The odds favor the market not embedding. They rarely, more times than not, the word is not rarely, more times than not, my experience has been that the markets don't embed. But if they do, you've got to go with what the play is. Plus, at this time of the year, gasoline, I've said it before, the seasonals are typically strong. If you look at natural gas, the market's gone up and all of a sudden it's starting to lose momentum. We're coming to the end of this really severe cold weather. And I know people in parts of the country are going to say I'm crazy. They're looking out their windows and it's snowing. You start watching. It's just the way that it works. You're getting into already the end of the first week of March. Pretty soon you get to the clocks change. I think it's this weekend. Everything starts changing very, very shortly on you. And as this all starts happening, you have to get to a period here where there's not as much demand for the heat that we had, and we got to wait for the heat to come back in the summer to see what it'll be. I'd keep my eye on the slow stochastic. As long as it's embedded, even with these corrections, the buy, well, what's happened is the momentum is saying the pros are going to buy on the breaks. Get the red line under 80 on it, and then you might put into play the market coming back into the support between the 275, 274 level of the 18 and the 100-day average of closes. I talk about this and so much more in my morning subscriber video. I just want you to understand what I'm able to do there. I have to talk generalities here. It's what I'm a registered broker. It's what's required of me. I can't come buy here, sell there. I'm dying to do it, but you can't. So what I do is I do this in the morning for subscribers, and I cover 40 charts at a time. I'm even, I think, going to add a few more charts to it, maybe the QQQ and some of the others in here, to give an idea as to what's going on in a few of the ETFs. Let me think that through and I'll make up my mind. But I cover all this right now. Adding another couple of charts wouldn't be a big deal for me. And I know there's a lot of you that trade the options out there, and maybe that would help. But as I do it, my charts will look like this. We're going to cover what you see here. In addition, more moving averages. And in addition, we're going to cover some window envelopes. I'm going to be able to say in that, here's what I see in the chart action. Here's exactly what I think the pros are doing right now. Here's the technical, and if there's a fundamental taking place overnight or early in the morning, because I recorded at 8:30 a.m. Central Time, I will tell you what that is typically, tell you how I'm viewing the reaction, whether I think it'll last or not, and away we go. And believe me, I'm throwing out specific trade ideas. You're going to get a lot of them. The nice part is you can stop the tape at any part. You can drag it and pull it to wherever you want to go on it, and you're able to keep up with it. You don't need a pencil and paper. How many times have you been on the sidelines? You're sitting there, I shouldn't be in this trade, or I want to get into this trade. It's either way. Maybe you didn't have somebody to bounce the idea off of. Maybe you didn't want to call a broker. You don't want to be talked into it one way or the other. Well, by me hiding in this video, so to speak, you get that. What's it cost? 26 cents a day to give it a try. Duh. 30 days, $7.95. After that, $15 for every 30 days, and you can buy a one-year subscription for $13 a month. We charge it up front, and away you go. It's pretty inexpensive, but imagine each day you're able to do this. How do you get it? Either call our staff. If you go to our website, go under Research or Education, the morning subscriber video. That's how you work with that. You can click here to get to our website as well if you're watching me on YouTube. I'm Ira Epstein, getting a canker sore or something in my mouth. You have a good day. I'll talk to you tomorrow.